All right, good afternoon, everybody. Event Trader here. Just going to go in as we discuss the week ahead, and going to be joined with Scott here shortly. We're going to run through some of the earnings that we can expect next week, take an early look at some of the charts. We'll certainly be going through these in a little bit more detail, but I just wanted to get the plate set for next week is another busy week on the macro and micro front. Certainly an earnings dominated week with some key headlines in the background with the Q2 GDP and the EU-US trades, obviously. Trade talks obviously catching a lot of attention, but earnings was the big story. Earnings will remain a key story in the markets, but we're looking at a little bit more of a move into the macro as well as we get the turning of the calendar into the month of August, which always creates a lot of reports on economic activity as we turn that page. Earnings will certainly remain on key. Quantity-wise, certainly just as busy as this week, but the quality drops off just a tiny bit in terms of the amount of big names, influential names that are going to be out there. But definitely a lot of volatility should be created, and there's a lot of names that should provide us some trading opportunities. So with that, I'm going to address the macro first, and then I'm going to pull Scott in here, and we'll go through some of those earnings reports. I'm just about to post here my week ahead note, so everybody can follow along. But we're going to see a pretty key theme going. I got my key themes going on here at the top, and with that, central banks will be first and foremost. We got the Fed on Wednesday, of course, but this is actually going to be a relative non-event. This is one of those meetings that's popping in between June and September. Doesn't have the press conference, doesn't have the update to the projections. So, I'm not looking for a lot of action from the Fed in this meeting. I'm looking for them to try to keep relatively benign in their statement. Their goal is to not change the narrative and to get people on board with a rate hike in September. So they got to walk that fine line of striking a little bit of a relatively hawkish tone without getting too far ahead of their shoes there. So that's going to be the interesting aspect. But in general, I would not expect a big news event from this meeting, and that's how the Fed would like to see it unwind. Perhaps the biggest one is going to be the Bank of Japan, and that's out Monday night or Tuesday morning. We've been talking a lot about it, and it's really helped to a global rise in interest rates, which has been one of the stories of creating a little bit of a headwind here for the markets. And as we get closer to that meeting, I'd expect a little bit of caution on the equity side here. So not sure how aggressive of a bounce we'll see from today's selling activity, which, we have the NASDAQ down 160 points on from its earlier session highs, and the S&P, that's fallen about 28 points from its highs. So seen a little bit of a late day bounce, but not really a lot of aggressive buying going into the close, and I wouldn't really be looking for that. Perhaps with a little bit of lighter volume we see that, but when we look at the Bank of Japan, what we're talking about here is a slight tweak to their current monetary policy, which is easily viewed as the most dovish out there on the block. So it's certainly notable if the Bank of Japan starts making some small tweaks. And some of the things that have been discussed is they currently have that 10% bond yield where they try to peg it to the zero rate. And what the early talk is that they could soften the language around this, providing it with a little bit more flexibility, which would suggest that they are prepared to move off this level. The other item of interest that we've been hearing is that they could change their ETF buying programs. Not the amount, but exactly what they're buying, with a focus on trying to get the long end of the curve, a little bit more volatility to the upside on that. Of course, inflation remains the key overhang for the central bank, and they just simply have not been able to reach that 2% target. One thing to keep in mind is in September, Prime Minister Shinzo Abe will be basically up for re-election in his party for the LDP leadership. So the reason why most people believe that the Bank of Japan wants to move now is they don't want to do it in September and potentially politicize any monetary policy action, and they prefer to move earlier rather than wait till the end of the year. So, we're going to be keeping a close eye on this and the market reaction. How much of a difference it should make in terms of buying and everything, that remains to be seen, but the general thought is that this is a small tweaking and just another step on the global scale of catching up with the U.S. Now, with that, we could very well continue to see some of this dollar weakness come through. I mean, one of the big stories for the dollar strength has been that divergence trade. So the currencies are going to be at the top of the charts in terms of what people are looking at going through next week as we approach August. On the earnings front, I'm just going to briefly touch upon this, then I'll go through some of these individual names with Scott. But as I said, it's pretty much, it's just about the same amount of companies that are reporting, but the quality is a little bit lower, but certainly still some big names. Tech is going to be widely represented, so want to see what kind of market reaction that they're going to be getting. And in addition to that, we have a couple of bigger names too, like Caterpillar and Procter & Gamble, U.S. Steel, Teva Pharmaceutical, Cerner. So certainly a lot of names to keep on the radar. And then on the economic data front, which I'll go through in a little bit more detail here in a second, the typical month end, beginning of the month, slew of reports that will come in. On the U.S. in particular, we're going to have that jobs and June PCE income and spending numbers. And on the global front, we got the manufacturing PMIs out Tuesday night, Wednesday morning, services PMIs out Thursday and Friday, and then a number of key GDP reports coming out. With regards to the U.S. economic data, I've put in red some of the key ones, and as we can see, we're going to get that employment cost index for Q2, always a key inflationary read, as well as the Fed's favorite inflationary measure, the PCE prices, all due out Tuesday morning, and with that, of course, the personal income and spending. On Wednesday, that's going to be a pretty busy day on the macro front. We get that ADP number early, which should help set the tone for Friday. And then, of course, the revisions for the manufacturing PMI and the July ISM manufacturing. And then at 1, we will be getting that Fed decision. Again, not really looking for it to be a big market moving event, but we got to keep our eyes out on it. And Thursday, nothing too major, factory orders and claims. But Friday, we get the BLS jobs report, and we'll also get the latest June trade balance. And then we're also going to get those ISM and market service numbers. So a pretty big day on Friday. Moving to the international side, we already covered the central bank meetings, which will be the key item on that front for the international data. But a couple other ones to mention here. Some CPI numbers out of Europe, starting off with the preliminary look for Germany and Spain on Monday. Also, another key theme will be 10-year bond auctions in Europe with Italy going on. So again, we want to keep an eye out and see exactly what kind of reaction we're getting in the interest rate yields with these central banks rolling out. And of course, on Monday night, as previously discussed, we'll get the Bank of Japan interest rate decision. Also, we'll get the early look at China's manufacturing and services PMI numbers. Tuesday, we will get German retail sales and the French CPI figure coming out. And then we will also get the preliminary look at the Eurozone as a whole. So always key numbers to keep an eye out on. And then the manufacturing PMIs will start rolling out in full on Tuesday night and lead us into Wednesday morning. On Wednesday, we'll also get an interest rate decision from the Indian Central Bank. as well as the rest of the European and American manufacturing PMI numbers due out Wednesday morning. Germany will have a 10-year bond auction, and then as we move into the afternoon, we'll get Brazil with their interest rate decision. As well as a Japan 10-year bond auction. This would be the first bond auction following the Bank of Japan interest rate decision, so certainly something to keep an eye out on there. And then moving to Thursday, we'll get the Bank of England. Of course, Chief Economist Andy Haldane moved into the hawkish camp, so we're going to want to see if that vote continues at 6-3 in favor of the Doves, or if we see the Hawks continue to make a push towards a potential rate hike in England. Also that morning we'll get the Spanish and French 10-year bond auctions, which will of course follow a couple of the key interest rate decisions and thus provide a little bit more of an outlook for what kind of tone we're looking to set out on the global interest rate front. Mexico will be later on that Thursday, so certainly key to keep an eye out there. And then we will also get that night the Bank of Japan minutes. Finally, moving into Friday, we'll get those service PMI numbers from Europe and the Americas. The Asia Pacific ones will be coming out on Thursday night, and then a Eurozone retail sales number. Just a quick glance ahead at the month of August, which usually tends to be pretty quiet, particularly in Europe and overseas, but there are some events that we want to get on your docket early. August 6th, Europe's set to make a decision on the Iran deal, which certainly will be interesting from a geopolitical front. One has to wonder with the EU-US decision today, I'm assuming that they're going to be looking at moving more into the US camp. I would have to think that that was discussed, and with that we could see a potential impact on oil prices. August 14th, we'll get Germany's Q1 GDP number, but also the key Chinese economic data for the trade balance and retail sales and industrial production. August 22nd, we'll get the Fed minutes from the meeting from this week. August 23rd and the 30th will set up as key day. That's what August 23rd is when we're expecting the written comments on the potential 10% tariff on the $200 billion of Chinese goods, and the rebuttal will be due by August 30th. So look for that trade theme to certainly take hold. And then, as we noted, all the central bank activity going on. August 23rd is the possible start for Jackson Hole. A little surprised they haven't announced the dates yet, but obviously always big with the central bank theme, and as we heard with Mohamed El-Arian today, that theme is certainly changing these days as we are looking at a little bit more tightening going on, and as Mr. El-Arian had noted, the key theme now is a reversion of the divergence trade rather than the famous new normal that he quoted a couple of years back that seems to slowly be slipping and losing its grasp on monetary policy. So that is our look at the macro front. With that, we will bring in Scott Smith to go through some of these earnings that we're looking at. Hey, Scott, how are you doing today?
I'm doing all right, Gav. How's it going?
I'm doing good. You getting any decent vacation time in with the family there?
Here and there. I went to the beach early this morning.
Which beach was that?
Jones Beach. Out in Long Island.
So if Blue X is giving you any good calls or wrong calls, go to Jones Beach and you can look for him and give him an earful and stuff. He loves hearing that. So
yeah. I gotta tell you though, the waves are a lot rougher. Either the waves are a lot rougher than I remember, or I'm just getting old. Or it was a full moon last night, I'm told. So
yeah, full moon last night, right?
I got tossed around pretty good. The kids had a pretty good chuckle at it. So
I don't know. I've been mesmerized by Shark Week all week, which is keeping me firmly on the beach or in a pool rather than the ocean.
Yeah, I know. I saw that awful. There's like a new Jaws coming out, Meg or something like that.
Yeah, for the Megalodon.
But the damn thing is like, what is it, like the size of a continent? I mean, it's not even scary.
It just jumps out of the ocean and eats cities one at a time.
Like, how do you not see that thing coming a mile away? It's so big.
It's based on the prehistoric dinosaur. I'm sure you've seen that famous picture with like the 6 scientists sitting in its mouth and stuff.
No, I haven't.
But I gotta tell you, I've been mesmerized by Shark Week. They've had some good stuff on, and some of the it made me nearly want to go out and buy GoPro just with some of the cams that they were putting on sharks and following them swimming around down around the mountains and stuff in the ocean. It was pretty cool.
Yeah, it's always fascinating. It is pretty cool stuff.
Yeah. Although the one thing I was bummed about is apparently air jaws are on decline because 2 orcas are eating all the great whites that jump out of the water. So a little bummed. A little bummed to hear that. But hopefully they could chase the orcas out, named Port and Starboard. And it's interesting to see how easy they can kill great whites. But anyway, I digress. Let's take a look at some of these earnings coming up, Scott. Some interesting names. We're going to be basically just glancing upon the charts more so than doing a deep dive into the fundamentals. We'll save that for during the week as we go through these names. But first up on Monday morning, wanted to bring out Caterpillar, which has slipped below its 200-day moving average, holding that 135 area. And obviously, I pointed it out in one of my comments prior. Earnings are these companies must beat. I mean, we've seen too many get taken to the woodshed on misses. So, I mean, that's obviously, that's probably always the case, Maj. I don't think I'm saying anything groundbreaking, but there's definitely been a divergence between winners and losers this period around. So, with that in mind, let's go through these. And Caterpillar first, Scott, what are you thinking?
Well, I've been swing long this since that late June sell-off down to the 135 area. And we were fortunate enough to, capitalize on the bounce back to 140. So made some nice little coin there. And then we also took some more partial profits yesterday as it was managed to rally back up towards the 50-day moving average. I think it was the 50-day exponential moving average around 143. So going forward right now, I mean, this is kind of in no man's land the way I see it, based upon that June correction that happened, sitting right around the 50-day moving average between the 200 exponential and the 200 simple. Like you said, these companies really need to step up their game in earnings reports, or otherwise they're just going to continue to suffer. They've been underperforming year to date, and if they don't step up their earnings performance, they're just going to continue to suffer a little bit here.
All right, we're going to throw two at you this time around. They're both in the same space, but these offshore drillers that we've been talking about them a couple months ago, and certainly the higher oil prices makes offshore drilling a little bit more favorable. But we'll take a look at Diamond Offshore first, Scott, DO.
Yeah, and then Rig. It's gonna be the one.
And then Rig will be the next one, exactly. So we're pretty positive on Rig, and it's definitely in a nice little upward trend here. And Diamond Offshore as well is getting in on the action here. It would seem like it's pretty much held steady since its Q1 earnings report back on April 30th, trading right around that 50-day moving average of about 1915. It's been chopping around now, this one, since the beginning of June, between 18 to 21. But certainly some upbeat expectations, although probably worth noting that so far these energy earnings names just simply haven't been living up to the billing.
No, not at all. The charts are very similar to them. Like you said, they're both drillers, or deep ocean drillers, I should say. I do kind of like them here. I think they've been kind of maintaining their relative strength based on the price action in the last 3 months or so. They definitely are trying to lift higher on a bigger picture basis. So I think they definitely have some upside potential, maybe to retest the June and July highs on positive reports. Obviously, if it's a negative response, both of these names could just start dropping down to fresh multi-month lows, and that's going to bring in both of their 200-day moving averages below.
Okay, and just to make people aware, Caterpillar and Diamond Offshore will be before the market opens. Transocean Rig, of course, is after hours. One more one to look at from Monday, Scott, and I'm looking at this one and thinking that 200's got to get hit, but that's Seagate Technologies, ticker symbol STX, which is obviously a peer of Western Digital, which saw some weakness from NAND prices and caused it to guide a little bit weaker performance in Q3, and the stock got hit on that. So we saw STX kind of breach and it's now firmly tested that 55 support level here. Just seeing Western Digital sliding to 70 on the day, and I'm thinking STX has got a ticket to that 200-day moving average if they post a similar report. The 200-day moving average sits down at that 51 level. Are you looking at anything in STX here, Scott?
Yeah, the only thing that makes me nervous about when you play a peer ahead, based upon the earnings reports, is that that there's shorts just pounding this thing today in hopes of that same exact type of price reaction on earnings. They're looking for that 200-day moving average down there, and it looks like it's going to get there. This stock has been super sideways over the last 3 months or so, between 55 and 60, not doing anything. And it's been struggling to really kind of maintain any of that strength back above the 50-day moving average. It's right here. You got critical support, line in the sand at 55. It looks like it's easily going to be dropping down to that 52, 51 area where the 200-day exponential and simple moving average are. I agree 100%. But like I said...
But when it's that easy, that's the concern, right?
Yeah, there's nothing easy in the stock market. So if you feel venturous, this is pre-market on Monday. So if you're feeling a little venturous out there, maybe start a small starter position, but just get ready to cover if they squeeze these things back up through 57, 58.
Okay, we're going to move over to Tuesday, then July 31st. One of my holdings here, American Tower Corp, ticker symbol AMT. Certainly some concern around this going into earnings in terms of some of the slowdown that they're seeing in India and potential FX headwinds. But stock's been acting pretty nicely this week, and I would note that comes with interest rates on the rise. Usually, given the high debt levels of these tower plays, they're a little bit interest rate sensitive on a divergent basis. But AMT held that area where it's got the 50, 100, and 200 day pretty firmly, and it's now moving back up towards 146, which is a key resistance level. I'd expect it to chop around in this area Monday ahead of the report, but I should warn people that there are some concerns around these expectations. But Scott, what are you looking at in the charts?
You know what I'm going to say about this chart, right?
Going sideways?
Going sideways, so that means just buy low, sell high.
Yeah. So you're selling it here then?
It's not yet, but just pretty like you could. But again, it's earnings, so you never know. But for the most part, you look at this chart over the last year, just slap a stochastics on there, or a MACD, or an RSI, whichever oscillator of choice that you prefer. And when it's oversold, look to start scaling in, and when it's overbought, look to start scaling out, because the stock has just been going nowhere for about a year now.
All right, next up.
But I do like it as your longer-term investment play. I would, since you like the 5G play further down the road, I would say, if you would hope that this thing does come in, so you could just buy it up on the cheap and accumulate it.
All right. Yeah, that's what I'd like to hear. So, we'll see if it breaks out from this area, but certainly one to watch. Next up, we're going to bring in Cummins, Scott, which looks like it could potentially be breaking out of that downward trend that's pretty much been in place for the entire 2018.
Yeah.
It's gotten hit pretty hard the last two earnings, but this thing would basically, at the end of January, it was trading at its 52-week highs of 194.18, and it has given up about 25% of that, even more, 30% of those gains to fall to 130. But we have seen it bounce back a little bit here to get up to 138, trading just below its 50-day moving average. But certainly, actually, you could go back to the last four earnings reports, and it's sold off each time here. So. It's interesting to see people kind of buying ahead of that. Perhaps they're looking for expectations for CMI to be lowered to an extent where a beat could certainly cause a little bit of a squeeze and get this thing rolling.
Yeah, this stock I used to trade this thing all the time about prior to 2018. I mean, it was just in a really nice uptrend for 2 years between 2016 and 2017, just riding those 50-day moving averages higher for quite some time. And then it just seemed to fall to pieces here and kind of retrace in 2018. It's down about 30% off the January highs, trading below the 200s, below the 50-day moving averages. However, I will note that it has retraced approximately 50 to 55% of the 2016 to 2017 run-up. So, 50% retracement, give or take. It's been down for about 5 months in a row, and this month so far in July is probably one of its strongest performances. You wouldn't know it, but just from the choppiness and the action that's going on, this is one of the strongest performances it's been putting in all year. So this could potentially be a nice little turnaround if it can get back up over the 50-day moving averages, over that 140 level. Otherwise, if it can't do that, you're still sitting in a big 6-7 month downtrend.
Yeah, I'm liking this one. I'm going to have to do a little bit more research on this ahead of earnings. Maybe I'll throw out an earnings preview for people there, just because I think it's one that should be on the radar. All right.
How the dividend? 3.14%. So dividend yield, nice.
Yeah.
Yeah.
Not a bad play. Okay, next up, before I throw out this ticker, I'm going to just send out an early apology from myself and Scott, because this is going to go to a subject that we had promised to do a follow-up on, and I take full responsibility for this failure to do so. But ticker symbol I, Scott, in Telesat, where I had promised a 5G follow-up. Earnings season kind of hits us pretty hard here with the coverage on so many names. So I do promise to get out an updated report. The good thing is 5G is still a little ways away, so we could still get you in some good positions there. But this is going to be one of the more interesting earnings reports. Certainly been flying since it last reported, and that's when it was trading down at $10. So it's basically doubled since its Q1 earnings report. This is one that I'll definitely be doing a preview on. But again, this is one too that they need to beat. If they don't beat, look for it to come back down around that 15 level. But what do you look for in not just but like names like this, Scott, where they just have a parabolic run from, in this case, 4 in early April. It's 5 bagger now up at that 2020 area.
I look for opportunities to buy on weakness, is what I do. When you have stocks that are this strong, there's two thought mentalities going on. One is that it's overbought. It's too far, too fast. So you have a very negative crowd getting in there trying to beat this thing down and really kind of capitalize on some sort of correction because they think it got too far, too fast. The other side of the coin there is stocks that run too far too fast means that there's institutional money and hedge funds or whatever you want to call it. People know something. Their prospects for this company are still pretty strong. I tend to be more in that latter camp because when stocks double or triple in a short time frame, most of the time they will correct and give back about 50% or even all of those gains in just as quick amount of time. This stock has not done that. This stock has maintained that strength, and it continues to just grind higher. And every time it tries to get sold off, it continues to rally back. So to me, this is a sign of a very strong company. It's under accumulation. I'm just looking for any sort of pullbacks to probably get long it. So you could put on, again, slap on those oscillators, RSI, stochastics, MACDs. Pay attention to it. As long as it's above the 50-day moving average, which is like $17. I think it's fair game for just staying on the long side.
All right.
And just to remind people what they do, Gavin, I know you said they're 5G related, but they have something to do with satellite 5G or...
Yeah, the small cells.
Small cells. They go on top of like lampposts and stuff in buildings?
Yeah, it basically allows you to shoot off signals in a number of different directions, which expands the coverage.
Is this the leading name in that space, or?
That's what we promised to get people to know that I've worked spectacularly on.
Yeah. They're not profitable yet, though, are they? I haven't really.
No, you know what? I'm going to be doing a deeper dive into them when I do that earnings write-up, so I'll have a lot more answers for you come Monday afternoon.
All right, thanks.
All right, next up we're going to take a look at Pfizer, which just in general I'm finding this big pharma space pretty fascinating. A lot of these charts look pretty good, but for whatever reason the IBB is breaking down. Certainly the weakness that we saw in Biogen, which is an interesting chart in itself here at this 340 area. But Pfizer is recently broken above that 3750 area, coming up close to its 52-week high, which it set back on its last earnings when it hit 39.43. We got this trading about $1 below that, but nice little breakout here. So, but we saw similar action in Merck, and Merck pulled back. Noted trend trackers got along on that from a while back. I like it as long as it holds this 62 level. Scott, what do you see in Pfizer?
So when it comes to like big behemoth companies like this that have just been around forever, I usually just tend to focus more on the weekly and monthly charts, just because they're just not the fastest movers in the world. So just looking at the monthly chart, Pfizer is still in context of about a 10-year uptrend line that doesn't come back into play until around $33. So if it ever started breaking down below $33, that would be somewhat of a concern. Overall, the last 3 years or so, it's been really in a choppy, consolidative type of ascending triangle pattern, whatever you want to call it there. And then finally, it's been breaking out above that $36, $37 resistance area just here the last week or two. So it looks pretty solid. I would say the path of least resistance is higher, up towards $40 and higher. So overall, big picture, let it stay in the uptrend above 33, and maybe you get 40 out of it.
Okay. Next up, we're going to kill a couple of birds with one stone here, and that's Procter & Gamble. And I'm going to just kind of paint this one with the broad brush because we've been pretty positive on the staples area, the XLP, which has seen some nice bids coming in. There is a feedback question which is addressed to commodity traders, so I'm not stepping on his toes, and we'll let him address it, but it's talking about soybeans and the other commodities and the impact on some of these staple names. In particular, they mentioned Campbell and General Mills within the question. I've been long General Mills for a while here. It's pretty much been flat, but I'm okay with the action that we're seeing. But in general, I'm looking at this move in the XLP as certainly a defensive-related area for the markets, and also just there's valuation down there, and I think PG kind of falls into this. Now PG's making a nice move. It got hit like the rest of them did, and following Q1 earnings in April, falling down at 71, but now it's been able to rally back to 80.66, and it's actually ahead or above where it was trading going into the Q1 print, and it's got its 200-day at 82.13, which it looks like it's dying to test. It's got a nice steady upward trend since the beginning of May here in this PG.
Yeah, for sure, and nice yield too, 3.5%. So picking it up on weakness back in May when all the staples were getting slaughtered, that was the ideal spot. It's Procter & Gamble. I mean, if you want this in your portfolio, you put it in your portfolio, you collect it, you hold on to it forever and get the dividend. When people stop buying, toothpaste and household products, then you get concerned. But overall, yeah, it looks great above here. It should be getting back above 80 and getting back above the 200-day moving average towards 85, in my opinion.
All right, and then the big one out that afternoon, of course, is going to be Apple, or as Jim likes to call it, the tiebreaker in the fangs, as we've seen two good ones from Alphabet and Amazon, and two bad ones from Netflix and Facebook. So we got Apple out. Saw it pull back from its 52-week highs today. Certainly a few people had to see that move in Amazon and get a little nervous there. So it's sitting just above its 50-day and some key support at 190. Scott, what are you looking at in this chart?
So I was swing long this the last couple of weeks. I just exited my remaining balance today based upon the aggressive selling action. So in my opinion, it looks like you guys are calling it the tiebreaker, but it seems like people are jumping on board thinking it's going to be another breakdown like Facebook and Netflix and even Amazon, which opened higher today, was sold into pretty quickly. Yeah. So it looks like the FANG names are kind of anticipating some sort of downside action in this one. It's almost double topish, I guess you can call it, with the June high and the July high coming in play right around 194, 195. So the burden of proof is right at this stage. I'd say it's on buyers. Today's activity is pretty concerning, with the stock making one of its biggest distribution down days. What is that? That's down how much? That's down about 2.5%, 2.6%. yeah, this is a little concerning. So I would say step aside. But I have real no opinion on this one. I wouldn't want to be long or short it. Even post earnings, I wouldn't even really kind of touch it. There's just no real clean setup here for this one.
All right. Next up, I just want to touch upon one subject here quick. It was a feedback question that I had gotten earlier on Alibaba, whether or not I'd be willing to buy it at the 200-day. And the answer for me there is yes. I mean, it continues to hold it. And with that in mind, I'm addressing it here because they are reporting earnings. But first, before we get into Baba, I want to take a look at Baidu. The ticker symbol BIDU. Another one that broke below its 50-day moving average, sitting just above the 100-day at 250 and the 200 at 247. Baba, similar action, so we'll address the two of them at once. Made that run up to 200, but since abruptly pulled back to test the 200-day moving average. Scott, do you have as much confidence as I do in these 200 days, or is there something technically that has you a little bit more concerned there?
No, I have confidence in them, but if you look at the charts, when it comes to the moving averages, I like to look at both the exponential and the simple, and I kind of use them more as zones as opposed to just using one by itself. Particularly on the higher price stocks, the exponential and simple moving averages tend to maybe be a couple points away from each other. So even though something on, we could go with Baidu. Baidu, the simple moving average is around 247, but the 200-day exponential moving average is around 243. So you got about a 4-point difference there. Might not sound much if you're investing and everything on a percentage basis, but when you're trading this stuff short term, I usually just kind of like to use them as a zone. So for the most part, I'd say, for Baidu, if it came down here to say, 247, 243, which brings it right back down to those June lows and the July lows right around the 240 area, that's going to be your key critical support level, line in the sand, whatever you want to call it, that it has to hold. To the upside in Baidu, this thing is pretty close to the highs there. It's made a couple attempts at over the 270 level. So the next time around 270, it could be a nice clean breakout up over 280. So keep that on the radar. It's kind of mid-range right now when you look at it on a 3 or 4 month basis. So.
Okay, one quick point of business here while we've been chatting away. Brett Manning's been busting his hump looking to short the NQs here. He got in at 73.02. He did grab 12 points there, basically looking for a quick retest of those lows going into the close. And now he's just ditched it. So playing a little bit of catch up here. So he did get 10 points there, took a quick piece, and now he's getting out, I believe, at scratched. So sorry for missing that for people. Should have been keeping a closer eye on it, but tough to look at charts and everything else at times.
I should yell at him for trading this late on a Friday summer afternoon.
Yeah, right?
He knows better. Hopefully our subscribers know better too.
Yeah. Of course, I was saying that I don't like to short on Fridays earlier, and then proceeded to watch 100 points of the Nasdaq bleed out in front of me. So who knows? Maybe today's not the day you follow all the rules.
It's just yeah.
So obviously we've been pretty tech focused so far and everything. I just want to point out a quick one in my holdings that is going to be reported, and that's Hillebrand, ticker symbol HI, the morgue stock that hit a 52-week high and has a nice steady upward trend there, testing 50 psych resistance. Saw some selling here like everything else did. Scott, you got any quick thoughts on this chart?
Gavin, you know what? I didn't hear what stock you said. I'm sorry.
HI, Hillebrand.
Is this the one that makes caskets?
Mm-hmm.
This is a favorite of yours, right?
Yeah, it's in my portfolio. So.
Yeah, people just keep dying.
And those baby boomers aren't getting any younger.
You know what, Gavin, like you said, this is one of these names that I think you just kind of sack it away and never look at it. I don't really have any opinion on it. It looks fantastic. Take a look at the monthly chart on that thing. It's just in a nice strong uptrend. The last couple of years doesn't really shake things up too much on earnings reports, it seems like. So I think you just kind of put it away in the portfolio if you like the story there.
All right. Well, here's one that I know you do like, and I know you do, well, not like as a buy like, but like to trade like, and that is, of course, Tesla sitting out there with its 126 million shares, and 27% of those are short. Certainly one of the hotter debated names probably in the history of markets here, and it's just holding on precariously to that 300 level going into that print. Obviously, production discussions will be key. We'll have to see if Elon Musk could keep his cool on the conference call, or if he decides to yell at more analysts. But on a chart perspective, Scott, what are you looking at?
Oh, it's an absolute mess on a chart. This for the last couple of months has just been up and down and left and right, and somebody tweets and somebody doesn't tweet, and there you go, it's jumping all around. I will say this though, the best times to trade this stock in my experience is when it's extremely tight and narrow in range, and it has like an inside type of week, and it establishes some sort of clear support and resistance level. I don't like to trade this thing when it's reacting and responding to somebody's tweet, or what they are going to do in production, or what they aren't going to do, or a downgrade or an upgrade. It gets way too volatile, the spreads open up and moves quickly. It's just very difficult to assess your risk. When it's quiet and it gets these tight doji inside days and inside weeks, it's a lot better swing tradey to set up and assess your risk and capitalize on. So that's really all I can say about the chart. I love trading it, but I don't trade it all the time because it gets a little crazy. But every now and then I'll jump in there when I think it's just the right time to strike. For earnings, it's a crapshoot. We all know they don't make money, or they're losing money and they're raising money. Who knows? But overall, I'll be trading it soon enough, when it's soon enough, probably post earnings.
Okay, here's one that's in a sideways move in a pretty tight consolidating pattern, and that is U.S. Steel, ticker symbol X, of course. Just kind of bouncing around in that 35 to 39 range right here. So we'll see if this report could break it out, but certainly has a chance to be one of the more volatile names out there, Scott, and of course a great proxy on the impact of trade tariffs on companies.
Yeah, you got a really nice looking 4-month range there, and this is what I'm talking about on a stock that I would just kind of just buy and sit with, and maybe risk about $2 or $3 on it. Nice holding of the 200-day moving averages over the last couple of months on the test there. Little bit of a rising trend going on, so it's kind of carving out maybe this ascending triangle pattern, looking like it wants to break out over that 38, 39 resistance area. If this thing can get back up to $40, I think it definitely has a chance to make a nice run up to, say, 45, back to year-to-date highs. Overall, you know your risk is going to be, if it collapses below the 200-day moving average, is around 34-ish.
Okay. Then going to touch upon this one, Wynn Resorts. You're no longer involved in that, right?
I have one tiny little short contract position going.
You're going to hold that into the...
I am, because I shorted this thing way back up near, where was that, 179, I think it was, 180, back in early June, on that little bearish pullback after the June breakdown, and then we got short right below the resumption of down lower, below 180. So yeah, I'll hold it short, because it's just a small piece. It's not going to make or break the bank.
Okay, moving along, we already discussed BABA. Let's take a look at Teva, Scott. Had a nice break above the 200, but since then it's kind of cooled off a little, and started cutting a pretty nice consolidating pattern in that 23 to 25 area. Of course, we'll want to keep an eye on VRX in the background too. I still have a piece in this VRX here that we got in from that 17 level. But for Teva, Scott, what are you looking at there?
So again, I would treat this one more as a longer-term play. I actually really like this name as a longer-term hold for a longer-term portfolio. It was beaten down for about 3 years off the 2015 highs, and then just this year, back in May, it started to turn that corner and started to get back above the 200-day moving averages. The 50-day moving averages turned around. You got that golden cross type of behavior going on there. It's not the fastest mover in the world, but like I said, I think that this one is actually shaking off 3 years of a downtrend and has a lot of potential to make a comeback. So I would just definitely look to maybe consider this one for a longer-term portfolio as opposed to just trying to capitalize on the short-term price action.
Okay, next
It's
up.
a generic drug maker, right?
Correct.
Yeah.
Okay, next up, name that I had nice success trading last year after earnings last quarter. It's Wayfair. It jumped on that pullback at 72, played the squeeze up to about that 95 area. Then I got smart and I cut it and just didn't enjoy that last 40 points of a move. Who wants all that profit, right, Scott?
Yeah.
So, but we are seeing it roll over since hitting its 52-week high of 128.44 back on July 23rd. It's pulled back to that 115 area. One of those low float, 54 million, high short interest, 21%. Short interest is down from where it was prior, though. It's coming in at some key support levels, but that stock makeup always makes these a little bit more difficult to figure out on the chart, I think.
Yeah, I mean, and this is one stock that I think everybody hates it. Everybody I know, nobody wants to be long this stock, and this thing is just defying gravity with that low float, high short interest. I don't know if they're profitable, if they have been profitable yet. I think that's always the big issue when I hear all the hate.
They are not profitable.
Yeah, so everyone, obviously companies that haven't been able to get into profitability, how do they justify a multi-month uptrend that basically the stock had doubled? That's really good management in my eyes, pulling the fleece over the wolves' eyes.
If you really want to hear somebody that's got virtual hatred for this, just listen to the Overstock call with Patty Burns on it.
Oh, yeah.
Overstock spends 30%, like about 40% of their call talking about how Wayfair is cheating.
Cheating what? Cheating...
It's just entertaining. They talk about their accounting methods and stuff like that.
Well,
if anybody's looking for a little entertainment, Patrick Burns, the CEO of Overstock, so he's kind of funny to listen to.
Is he the same CEO that's been around forever?
With the Sith Lords back in the day for the shorts and stuff. Yeah.
I think he got probed by aliens or something too.
Yeah, I don't know, but that call, he basically rails against Wayfair, half of it. It's pretty funny.
Yeah.
Anyway,
as a trend follower and a technician, the stock's fantastic. I can't argue with that at all. If it comes back down towards the 50-day moving average, which would be about 6 points lower from now, around 109, you take a look at it for a bounce. But knowing that this is a low float or high short interest, unprofitable company, that kind of makes me a little, I wouldn't be betting the farm on a trade like this. This is more one of those things that you treat real speculative if you're feeling a little frisky out there to throw some money around just for volatility's sake.
Okay, next up, one that I know you played this week. We talked with Robert Reed about this earlier and stuff as well. That's Solar Edge, ticker symbol SEDG. They report Thursday. Obviously, that first solar report's going to have people a little bit more cautious going into this print. It's sitting there trying to hold this 53 level at the moment. What do you think? I mean, you saw it in action this week, so I'm assuming that you have a pretty fair idea of what you're thinking happens with this one.
So for years, I was just not buying into the solar theme at all. If you talked to me back during before 2012 and stuff like that, I just never thought solar was really going to take off. And I got to be honest with you, now I'm just seeing it everywhere. Driving across country, to going on vacations, I see more and more cleaner energy type of movement going on here the last decade or so. Even for the wind farms that I've seen, there's a ton of wind farms in this country, so they're really kind of sprouting up. And I'm a big fan of solar. now, seeing it kind of develop more. And Solar Edge, I think I listened to the CEO once on Bloomberg TV, and he really just seemed really impressive to me. And then I heard you guys do a little bit of your research, and the stock being on emergent growth the last year or so kind of told me it's definitely a name to watch. I was trading it last year. I was trading it earlier in the year, and then it just fell off my radar the last couple of months on this drop. Got back into it 2 days ago on that bit of a breakout, hoping that it would get some sort of lift ahead of earnings, maybe a 2-3 day run up to $60 ahead of earnings. Then it looks like First Solar's earnings kind of put the kibosh on that type of trade there. So I don't know what to say about it ahead of earnings, but I do like the story, and that's not something you hear too often from me because I'm so technical based. So take that for what it's worth.
Okay, next up we want to take a look at Take-Two, which has recently pulled back following those EA results. It was testing right around near its 52-week highs. So as we saw with EA, they just need to beat, but nice upward trend. And I think for me, this is one that falls into, Scott, that talk you're having about buy-on pullbacks.
You're talking about Take-Two, right?
Ticker symbol TTW.
Yeah. When does Activision come out? Do they come out as well or no?
Not sure. Not sure. Right. I might have glossed over that. Would have been one that would have fallen on my radar.
Well, I'll tell you, seeing EA get hit the way it did is definitely a concern. Those are obviously the more sports-oriented games that are out there, whereas Take-Two and Activision seem to be more the first-person shooter games and the more team-oriented, cooperative type of games that are out there, adventure-like games. Yeah, Take-Two, these stocks have been doing great the last 3 months or so off those April, May lows. So the relative strength in the group is there. If it has a good earnings report, look for the breakout to fresh June, July highs. If it doesn't have a good response to earnings, start looking at just all the support levels below. 50-day moving averages come in play around 118, 119. The next thing below that might be around 110, 111, which is the 200-day simple moving average.
All right. And then that is going to do it from this side, Scott. Certainly plenty more names that we'll get into a little bit more detail as we go along throughout the course of the week. One thing that I did want to alert the users to, and Scott, I think you'll be happy to hear this. On Monday, we are going to be getting Craig Rapisarda in to talk a little bit about earnings. That's, of course, Trend Tracker. And for those of you who might not know, Craig's the one that basically runs all our earnings over here and does a phenomenal job at doing it. So we're going to be getting him in on a little bit more of a regular basis, at least once a week to kind of do a recap on earnings and kind of a look ahead at some of the key earnings. He's going to discuss some of the themes that he was seeing, and also he's going to discuss some of the some of his trades that he's done, some of the names that he's on. He's IMing me right now to keep the expectations low, but he's just being humble over here. He's a pretty smart cat who really knows some good themes and gets in early on these ideas. So I think people are going to really enjoy having him talking a little bit more. And I was talking with him, and obviously Scott, we talked about Robert Reed. So I don't know if you're around on Monday, Scott, but I'm assuming that you're going to want to jump on when Craig comes on, because he really does come up with some really good ideas, so I think the subs are going to like him. And
Craig's probably going to like to hear this too, but he definitely has a really good track record of picking some stocks that at first you hear the tickers and you hear the stories and you're like, there's no way I'm putting my money in that. And then next thing you know, these things are just the hottest stocks over the next 6 months, over the next 9 months. I mean, he was early in on Tesla when it was trading back at 30s and 40s. He was early in on Trade Desk when it was trading back below $40. Stitch Fix, Goose, Goos, when it was like a teenager. He just has a really good sense. I think Match.com was another one that he was in. he's just got a knack. I don't know whether he's just scouring the emerging growth focus list and just digging deep into the stories, but he's got a fantastic knack for getting in early on stocks that just have this fantastic growth potential. So, yeah, I definitely love to hear from him and see what he likes for sure.
Yeah, and definitely, again, like I said, a recap of the earnings from him will be very educational and for all our subs there. So we're looking forward to that next week. We'll also have Robert back on next week. I'll be talking with Scott, figure out his schedule as he placates the family and the wife, of course, and subs. Yeah. So, and one quick question just to touch upon on feedback. I'm getting a question on ITUB, which is a Brazilian bank that I'm being asked about. I have not looked at it too closely, but I do know that with a lot of these Brazilian names, there's a lot of geopolitics going on, which has taken some favorable turns that I don't have all the details. The name that I was looking at from that space is GOL, which is the airline. Place that I really like. I had mentioned it a couple of sessions ago, and that's just making a nice bounce back here and coming up into some key resistance. But ITUB, I will add that onto the list to take a look at. But really, I just think that that's more along the basis of a more favorable outcome expected for upcoming whatchamacallit elections. So that's basically my general take on it, just at the 3,000 foot level, but we will take a closer look into it.
I know this sounds bad, but when it comes to like a series of foreign stocks and countries that I'm just not familiar with, the easiest way to play it is always by going after the ETFs. That's always been my take, when it comes to Brazil, I think you have to look at the EWZ. What's nice about some of these ETFs too, they do pay dividends. So EWZ is like 2.8% yield, and there's actually a Brazilian small cap ETF, EWZS, and that actually pays 5.6% yield.
I've never even heard of that one.
It's very thin, and again, this is it's just the way I tend to approach, because like India, for example, I don't know anything about these Indian companies or the way they report their finances, what laws they follow, but it's so much easier to go after those Indian ETFs.
Yeah, the INDA is looking great too.
Yeah, the country ETFs are always a nice, easy escape if you don't want to take on too much risk and play it that way. So don't ignore any of those. So anyway.
All right, and just the INDA, for what it's worth, is breaking above its 200-day, and we got that India Central Bank.
Nice, looks good. Yeah.
Tomorrow, or next week, I should say. So, Scott, with that, we will pull the plug on the week, and thanks to all the subs for all the feedback. It really helps keep us focused on the markets, and hope we're making you money this week, and that's our goal every week. So, Scott, you enjoy the beach out there.
Yeah.
Don't get eaten by sharks, and I will. Are you on the desk Monday, or are you off Monday?
Yeah, I think I should be here Monday.
What?
Okay.
I should be. I'll let you guys know ahead of time.
Man.
That's all right.
Okay. Well, we hope to hear from you then, and everybody else have a great weekend.
All right. See you guys.
Okay. Talk to you later.
We're gonna tell them anything that they haven't heard before.